All right, what's going on, guys? It's Luke here. Today we're going to run through, I'm going to basically break down the market again, kind of go through and just explain to you guys how you should be approaching all-time high trading. Now, as you can see, we did put in all-time highs today on NQ, and ES had put them in earlier, but basically we've put in a new all-time high in the market. So what does this mean? It means we should be focusing on longs and continuations higher. As long as the opportunities are presented, we don't want to really be looking for shorts unless it is a scalp or we get clear shift from bullish to bearish. So let's go through the market really quick today. Starting off at market open, this 30-minute gap was my condition. I was looking for this to hold price, push it higher. And if we traded through there, would I be looking for sell side, which was this hourly and all these draws down there. But again, I was favoring bullish at this point. So again, pretty much there was a couple opportunities. If you guys see my trade recap, you already know we had this long opportunity right here. I got break even on. This was a great long. We had an SMT, and then you could have targeted these highs right here. I just missed that one personally. I got in this long and got break even, and then this was the winning trade that I took. Executions right here, and yeah, this was a simple trade. Basically, what happened? Price pulls back again into a 15-minute gap. It's a smaller gap, but what do we expect? We expect these gaps to hold and push price higher because we are at all-time highs. We're expecting higher prices until proven otherwise. Entry confirmation, I entered off of, again, this 1-minute close right here. This was a better candle closure, and this was a better entry in my opinion at 10:30. But regardless, you're basically just looking for longs, and as you can see, like, people would probably think, all right, the market's going to slow down, but what does it do up here? Even up here, right, we tap into a 5-minute gap, we get a little push higher. You go up to the 15-minute, same thing. We come back in, we tap into the 15-minute gap, we go higher. Yeah, I mean, you scale down, like it just, you'll see continuations on all these time frames until we do eventually get that later sell off later. But as you can see again right here, we pull back, 3-minute gap, continuation higher. Now, do I recommend trading at this point over here after markets kind of chop around? No, but it's just going to show you that price is just going to want to continue higher and higher and higher. So how do you approach all-time highs? You are basically just looking for pullbacks. You're waiting for confirmation to the upside, and you are looking to long. And the only two conditions and times that you should be shorting are if you're looking for a quick scalp into like an unfilled gap in order to push price back higher, or we get a clear shift from bullish to bearish on the higher time frame, right? So what would that be here? I can see on the 4-hour we are extremely bullish. We do have some unfilled gaps down here, so this could be an area where we could see price dump into, so you could look for shorts into there. But do I recommend it right now? Not right now. But we'll see what happens at the start of the week. I'm recording this obviously Friday in the PM. But the way you need to trade all-time highs is you are just waiting for price to pull back into imbalances, preferably higher time frame, like 30 minutes, 15 minute, 5-minute, and you're waiting for a confirmation out. You're just trading a simple continuation model. You're looking for displacement out, and you're looking to target the next draw on liquidity. Now, what do you target when we're at all-time highs and there's nothing to the left to target? What you want to be looking for is for new structure to form overnight. Like, let's say, for example, right, let's just draw this out. Let's say we get on the charts Monday morning and we seen that price overnight made a nice push up, and we see that it left some low resistance liquidity. We wait for market open, maybe tap into a 30-minute or a 15-minute bullish gap. We get an inverse to the upside, and then we're looking to target all of this low resistance liquidity that was built up overnight. So that's the type of stuff we're looking for. We're looking for price to pull back into higher time frame gaps and take continuation models and look to target overnight levels, like overnight low resistance liquidity. That's what we're looking for. So that's like, let's say London session pumps overnight, we get a nice pullback, we get a manipulation at market open, and then an IFEG displacement to the upside, and we're targeting overnight highs. Okay, does that make sense? Now, what would be the opportunities to short? Let's say we do get a clear break of structure on the higher time frame, the 15-minute, the hourly, and we are getting, let's just say, for example, we built up some low resistance sell side overnight, right? Let's say we built up low resistance sell side overnight. We get manipulation, we get a break of structure, clear market structure shift, and we have an unfilled gap down here. Let's just say, for example, we have an unfilled 15-minute gap with low resistance sell side liquidity leading into it. We can look for a quick short to take out low resistance sell side liquidity into the higher time frame imbalance, and then from there, what do? We look right back for longs back to the upside. So that's going to be the way you guys need to approach trading all-time highs. Number one priority is looking for longs, and what's that going to be? You're going to be waiting for price to pull back into higher time frame imbalances. And again, since there's no draws to the left that we can look at on the chart from the left, you're going to be looking to target overnight draws and liquidity. So that would be like your session highs, London lows, and low resistance liquidity that was left from overnight. Like, let's say, for example, let's say this is the chart Monday morning right here, and we see all this low resistance liquidity, and say, for example, we have an unfilled 15-minute gap right here, let's just say. So what we want to see is price, manipulate down, entry, and then we're looking to target all this low resistance liquidity that was built up overnight. Now going over to shorts again, let's say, for example, we do get a shift down, and we have some low resistance sell side that we could target. We get a retrace, we get a clear shift from bullish to bearish. Only then would I be looking for scalp shorts into take out that low resistance sell side liquidity into the unfilled gap. Let's just say we had an unfilled gap here, and then from there you're looking for price to rebalance and continue back higher. So main priority right now should be longs. Now what am I looking at for the week coming up? I'm gonna have the full outlook out on Sunday, but I'm just looking for this to continue until we're proven otherwise. So we do have, like I said, higher time frame unfilled gaps. We have this higher time frame daily gaps. We have higher time frame 4-hour gaps. We have all of this. So you really want to be paying attention to how price is going to be reacting off these gaps. If it's reacting and it's continuing to show that it wants higher, you should still be looking for longs and then just target those overnight levels or those new draws that are left, right? If we really start to shift bearish and start breaking structure, we start inversing higher time frame gaps, only then should you be looking for short-term bearish plays. But just because we're at all-time highs does not mean we've topped out. We can keep going higher and higher, so you guys need to understand that. So that's it for this one, guys. Pretty solid week of PA. I can't lie, I had a pretty good week. Yeah, let's hope we get good PA going into next week. And yeah, that's it from me, guys. Be back with some videos this weekend, and I'll talk to you guys in the next one. Peace.